You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market, from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tosaw from RCM Asset Management, Andrew the Rock Lobster Joe Vanazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody, that rockin' tune means it's time once again for the rockinest bi-weekly option show out there in the known universe. It's time for the option block. My name is Mark Longo from the OptionsInsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. Friday, quite a few great programs, about a dozen for you guys to check out on the old network. I know most of you already are subscribed to the network feed. If you're not, if you're one of the holdouts, you just like the option block, that's fine. We won't hold it against you, but you are missing 11 or so great shows, which are easily accessible via our network feed or the website or app or wherever you get your favorite podcast program. Just type in the old Options Insider Radio Network, and you're pretty much off to the races. Of course, for you hardcores out there who can't wait a day or even a few hours to get the show, we beam it live to your ear holes every Monday and Thursday, 3 p.m. Central, 4 p.m. Eastern, via Mixlr, Mixlr. You know how to grab it. Just look at that link we put out on social media. Grab it, set it and forget it. Follow us on Mixlr, whatever the case may be. However you choose to get it. Then you get not just this show twice a week, but you also get Ball Views. You get Twifo Live. You get all the other shows we do, sometimes live, little surprises during the week, some great interviews, all the other good stuff. So grab that link. Keep an eye on it. You'll know instantly the second we go live. And, of course, you can always hit us up. Questions, comments, insights, pearls of wisdom, all that fun stuff. We do, yes, we actually do like to hear from you guys. And joining me on the old program today, let's start off in the tranquil hamlet known as St. Charles, where we are joined by none other than Uncle Mike Tosaw from RCM Wealth Advisors. Uncle Mike, how go things in tranquil St. Charles?
Oh, everything is beautiful as always. And I'm kind of excited today because I remember back in the 90s when Michael Jordan retired and came back after a couple of years, the Bulls came back. They were better than ever. They were 72-10, and they won 3 more championships when Jordan came back. But since our show is way better than any professional sport, and we have someone that came out of retirement today for this show who's far better than that Jordan guy, I'm kind of excited about the potential of today's show, I have to admit.
Yes, indeed. It is exciting. And, of course, we got the Greasy Meatball coming in a little bit fashionably late as usual, but we're not talking about him, listeners. If you're a long-time listener of the show back in the OX/Schwab days a few years back, you may remember one of our regular cohorts, a stalwart on the O Show, a fan of all things macro. I am pleased to welcome back on the program Alex the Viceroy, easy for me to say today, Alex the Viceroy Jacobson. Alex, Mr. Viceroy, welcome back to the show, sir. It has been far too long.
Mark, thank you. It's good to be back. I've had severe separation anxiety, and I doubt I will hear things as nice said about me anytime other than my eulogy. So it's good to be back, and thanks for those great comments, guys.
And Mr. Viceroy, since it has been a while since we checked in on you, what the heck have you been up to since the last time you were on the show? I know you've been popping about the industry quite a bit. Where are you hanging your hat these days?
Okay, so I work for a little over a year now. I work for a company called Exodus Capital, and I know all of you are running to your your Latin English dictionaries now, but I actually run Exodus US. Exodus is a private family office, a family out of the EU. Obviously, if they have a private office, they have some wealth. The office I run was originally headquartered in London. So most of my team has come over from London, and they're leaving London because of Brexit. And the family is moving more of their assets to the United States for a number of reasons. But one of the reasons that's timely is their expectation of what's going to happen to U.S. tax law and U.S. estate taxes. And now, a little bit about what we trade, and I will be brief. We trade on our desk. We trade stock, but predominantly what we trade is European. So I have lots of legacy positions that I inherited that are the big names in Europe. We trade stock, we trade options on those. And let me tell you, we are blessed in this country by the liquidity that we have in U.S. markets versus what you see over in Europe. But we trade stock, predominantly concentrated positions, and we trade options around them to hedge. Or if we think something has become undervalued, we'll sell some puts in it. In two of the names, I approach almost all the open interest, so I'm not very fond of that situation, but that's just kind of the way it works in Europe. We also trade structured products. When I inherited this book, it had a huge concentration of structured products with optionality in them. So things like structured covered rights, structured put sales, structured protective puts, call spreads. I am trying to get them out of that business. So as we get opportunity in some of these names, we trade out of the structured products, which aren't very liquid, and then we replicate the product ourselves using the actual listed product. We trade converts, and I inherited a convert ARB group from London on November 1st. So we're integrating those folks now. And then we trade volatility, and we trade both U.S. vol and we trade European vol. And again, that's a group that came over from London, two very talented folks who worked on a bank desk and then got hired away. And of course, in 2016, when everybody was selling vol, they made a lot of money. I not only supervise them, I risk manage them. And that means I never sleep at all anymore. But that's essentially what we do. Our desk is slotted to trade from 11 p.m. every night to 11 a.m. For what we do in Europe. And then, of course, if the U.S. has been active, today it was, I got home at 2 o'clock. Now, my office is about 3 blocks from my house. So, I can kind of move the book over and trade some of it at home. But some days we trade 24 hours, and that's what we do here at Exodus US.
There we go. I like it. An interesting and indeed a detailed description. We'd expect nothing less, sir, from the Viceroy. All right, with the team mostly assembled, let's dive right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block, the portion of the show where we break down what was moving, what was shaking in today's market activity. We've joked many times, pretty much all of 2017, that it didn't seem like really much could dissuade the bull from his set course. Didn't matter if it was earnings or Trump or North Korea or take your pick of macro and even micro shocks. Nothing could really turn us to the dark side except for a few blips and maybe a little bit of that bloom coming off the rose today. Not a massive sell-off by any means, but any red on the screen these days is worthy of note, and this perhaps a little bit more red than we've seen recently. The S&P actually kind of the laggard of the group on the downside, which is a good thing for your bulls. Only off about 0.3% today. The tech-heavy NASDAQ kind of playing Goldilocks today, off about 0.5%. So right in the middle of the group. And the Dow leading the charge to the downside, off nearly 0.75%. of a percent. Of course, all this red in the major indices means a little green on the old screen, at least when it comes to ye old vol products. VIX cash, after spending the better part of the last week or so, well down, flirting with record lows last Friday. Starting off the day, getting as low back in the 9 handle again today, then flirting ever so briefly intraday with the 12 handle. Haven't seen that in forever. Those comparatively lofty heights of the 12 handle, settling out right around 1060 today, off a paltry 0.8 on the day, but still a little bit of juice back there for all of you who complaining lately. Not a lot of juice to squeeze out there. Since you are our guest, Mr. Viceroy, I will give you pride of place, sir. I know you've been doing a lot of things, like you mentioned, a lot of different markets than we usually talk about here on the show. But that said, what's been catching your eye in recent market activity, sir?
Well, we've had a big appetite for FANG. And in fact, yesterday, the ICE listed the FANG future. So a year ago, when I took this portfolio over, as we transitioned out of European names and raised cash, we began buying 4 or 5 of the FANG names. Now, you know, if you listen to the old show, I'm a huge fan of Amazon, and we've been buying Amazon over the last year and selling puts on Amazon. And that's exactly what we were doing today. Amazon came back off its lows, but it's a name we like. It's a name we don't want to transition out of yet. And we've bought quite a bit of it. And today we were, because of our size, the options market sometimes is tough to get stuff done. So we're not only looking at, simple metrics like what's vol at a strike, we're also looking at what's availability at a strike. So today we were selling puts and buying Amazon stock. We were doing the same in Facebook. We were doing the same in Google. But we really, sounds like someone's in a bowling alley.
Oh, sorry.
We are very partial to the FANG names.
Gotta love the FANG. Yes, of course, when you were back here on the show, you were just talking your own personal love there for all things Amazon. Sounds like these days you have extended that into the institutional side of the space as well. Buying some size in Amazon, writing those puts to get even a little bit more long, squeezing all the juice out of good old Amazon. Certainly can't fault that trade of late. It certainly has worked out pretty well over the course of 2017. And you mentioned there's some background noise. That could only mean we are joined by the greasiest of meatballs from perhaps a playground or a scenic bus terminal near you. Mr. Meatball, welcome back to the show. And where the heck are you today?
I'm on LaSalle Street right now. So I just got done with a meeting at the Board of Trade, and I was watching the market. And holy cow, let's talk about today, because today there was some craziness. I don't know if you guys have taken a look at the Russell 2000 or HYG, but junk bonds look terrible. They're in a free fall. The Russell 2000 has seen a major push in volatility, both up and down over the last couple of weeks. Something is some of the underlying metrics are not looking so hot. If you kind of compare the performance of the equal weighted S&P to the cap weighted S&P, performance in the equal weighted, where we kind of look, which gives you kind of a better view of the stock market as a whole, as opposed to just kind of the top 10 names, which, if you buy the top 10 names in the S&P, you're picking up something like 70% of the performance, something crazy like that. And so the equal weighted has not been performing. It's been getting completely burned by cap weighted. And I think we're starting to see some cracks in the overall market. The Russell 2000 in particular is a little scary, along with the movement in HYG and J&K, which both look like there's something wrong in junk bonds. Treasuries are starting to fall off as well. And so that really did cause things to get a little crazy. VIX got over 12. It went backward for a second before everything came off. Somebody pushed a button and bought everything. And then we saw just, kind of we're up for the rest of the day. And, maybe we'll have a nice Friday tomorrow, but I think we're starting to see a chink in the armor of this overall market, most notably with the what's going on in the bond market and the small caps and, the bottom 475 names of the S&P 500.
Mark, let's play our live game. I'm going to pull it up right now. Oh, let my surprised exclamation be perhaps a clue to you, sir. I just pulled up our old friend RVX. How many times have we played this game recently and been bitterly disappointed? I'll give you a hint. You won't be disappointed today. What do you think RVX did today?
It traded one contract.
I like it. Keeping it very conservative. Actually, 206.
Whoa!
Deal with that, sir. 206, of course, if you're not familiar with RVX listeners, that is indeed the Russell 2000 volatility index. Yes, there are other VIXs out there, and a lot of them haven't caught on for a variety of reasons that are head-scratching and perplexing. But c'est la vie, we used to talk RVX a lot on our Volatility Views show. Never really lit up the world, but these times when it would disassociate from the broad VIX and the S&P is the few times it would really light it up, and good to see that it is doing some content. In fact, that is pretty much almost equal. They pretty much doubled its open interest with the trades today. So there you go. RVX lighting it up. Perhaps something you guys may want to pay attention to if you're like everyone else who's writing to us saying, man, there's no juice in the VIX. It's not worth the squeeze. Why should I bother? Where else can I look? Well, I gotta deal with some wide markets, but perhaps RVX may be an alternative for you. Speaking of alternatives, what alternatives caught your eye out there, Uncle Mike, today? Maybe a little gold, maybe a little crude, maybe a little something else esoteric, maybe 2 years of silver. What was on your mind today, sir?
If I could get more along, I would. I hear what Mark is saying in terms of some of the early potential warning signs in terms of the chinks in the armor for the market. In terms of the other things that I would add to it, we're getting kind of close. We're not at an inverted yield curve yet, but if you look at the yield on the 10-year, I believe it's around 2.33. Yield on the 30-year, about 2.81. It's getting close, but it's not inverted yet. So I would add that to Mark's case of there being some concerns of the market, and that if we do get an inverted yield curve, it's typically not a good thing. Let's leave it at that. But I kind of view today as a few minor raindrops and I believe that with what the market action of today, it's going to blow over. Now, I know that I'm a broken record. I've been bullish on this show for at least 600 episodes, to say the least. But a couple of things to point out today. Markets are actually higher on the day. The lower numbers that you're seeing is based on the gap down from overnight. At least from the standpoint of the S&P, we're up about 4 points or so from the open of the day until the close of the day. In the middle of the day, when we had the downturn, right around 11:30 Chicago time, I believe, is when we had the lows. The next point of resistance would have been about 2 points lower on the S&P. And by point of resistance, it would have been a week ago today in terms of where we were. So we didn't make a new 1 week low today. And on the day, we're actually higher. Overall, with the way things are right now, I think this is a very bullish time. The fact that we have TLT, for example, is actually lower on the day. Where's the money going then if we have all this selling? And whether this is low volume, high volume, whatever the case may be, I really think that today was a phenomenal buying opportunity. Now, the only real buying that I got to do is I closed out a few short calls. I don't know if I can really get much longer than I am right now, quite frankly. But overall, I like this market. I think that we're going to continue to have more of a rally going into year's end. If there's paranoia, if we have a lot of quote unquote, I'm making the air quotes with my hands right now, bad things happening, why are the metals flat? I shouldn't say that. Gold's up a little bit, but silver's virtually flat on the day. We're not getting a lot of other indications besides bonds at this point, and the bond indications I don't think are, like I said, I think they're just a few raindrops. Mark's seeing grayer clouds around the horizon for the bull camp like me. I just think it's a few raindrops, and I really believe that today was a tremendous buying opportunity. And here's the best part of all of it, folks. Volatility is still in the 10 handle range. So let's say you go out and you buy some calls, and let's say that I'm totally wrong and the bears are coming to town. Well, you didn't really pay that much for those calls that you bought. From a risk reward standpoint, I really like buying calls from an overall stock market perspective at this point.
Yeah,
calls.
I do agree with you there, Mike. I think that, there's some really cheap ways to hedge in using VIX or some of these other names with the VIX still relatively low. I was kind of I was giving a presentation last night, and somebody asked, why do I like call spreads and VIX so much as a hedge? And the answer is, most people aren't really worried about the VIX when the VIX is 9, most people that are like really hedging, they don't really care if the VIX goes to 12 or even 12.5 or 13. They care if the VIX goes to 20 and 25. And so you see all of this activity on way out of the money stuff, the 15s, the 20s, the 25s. Currently, I believe, and I'm looking at December, currently the December 25 strike has the most open interest. Those calls have the most open interest in all of December. And that's because people go in there and they use those as like the hedge in case the real stuff happens.
It's because of our crazy 1x3 friend or who
some
bought
sort
them all.
Of craziness, yeah. But the point being is that I can buy a 12.5 call and sell a 20 call and pay about $1, less than $1, and so I'm getting what amounts to 6 to 1 on my risk, and I'm getting and that's a really nice hedge over the top of any portfolio. I like that a lot as a kind of portfolio hedge trade. So, Mike, I am in your camp in that respect. What I've been saying for the last couple of weeks is, if you're long only and you don't have a hedging process in place, and you agreed with me on this, if you're long only and you don't have a hedge in place or you don't have a hedging plan in place, you are either stupid or lazy or both. And if it's your financial advisor that doesn't have anything in place, he should be fired immediately. So that's how I feel about the situation and what I'm looking at.
I know we got the Viceroy on, so we're only allowed to talk macro, but cover your ears for a second, Mr. Viceroy, because we're going to get a little micro here. It is still earnings season, and some big names still popping off after the bell. And a couple of you guys I know really like to trade, including Disney and NVIDIA. Let's start in the House of Mouse. See how Disney, 2017 hasn't exactly been a banner year for Disney, when the rest of the market is up, multiple digits there, 10, 20, 30%, depending on where you're looking. Some names doubling or more since last year, election time. Disney hasn't really felt the love. They're up slightly on the year after having peaked to trough. A lot of that is the albatross of ESPN hanging around their neck, the fear of cord cutting on the one side. On the other hand, the parks are knocking out of the park. Pun intended. The movies are knocking out of the park. So there's a lot of good and a lot of bad. Of course, they're popping off after the bell today. Let's see how they're doing. They were pricing in, they closed today about 102.60 or so. They're pricing in about $5, so a little shy of 5% out there. And so far in the after hours, they are off about 3%. They're trading 99.60, so off about $3. So again, looks like perhaps the bloom is not back on the rose for all of you out there who are hoping for a little sign of life there from Disney. But on the flip side, perhaps not quite living up to that straddle if you were a premium seller out there. Perhaps still live to fight another day. Moving on to a name that's been just a high flyer this year. I know this is one of the Rock Lobster's favorites. He's brought it up on the show multiple times. It's kind of hard to ignore. Looking at a chart of this one over the past year or so, or even 2 years, it's been just rocking. It's like the market collectively woke up to the potential of this name, and they've just been driving it north ever since. Of course, I'm talking about NVIDIA, ticker symbol NVDA, closing today, about 205.30 or so. They were pricing in right around $16, so somewhere in the neighborhood of 8%. And as we're looking here in the after hours, they are up about 270 or so a little over 1, about 1.3%. So so far, a resounding meh when it comes to NVIDIA, at least here on the upside. Not quite the explosion some were pricing in, maybe a little bit overdone. So maybe these are the names perhaps that are bucking the buy all the premium trend that we've seen pretty much work out pretty well so far this cycle. Alex, I know you don't like micro, but you did mention a few names you were watching earlier there with your fund, Amazon in particular. Any of these names on your radar? And if not, any other names this earnings cycle really kind of catching your eye?
As soon as this call is over, I'm going to go out and try to buy Disney overseas. I like that name if I can get it under $100. As I say, we trade a lot of stuff of what you'd consider to be the U.S. after hours, and a lot of U.S. names are horribly illiquid after hours. But the great thing about having institutional brokers is I can make one phone call and get the market for it in Asia, U.S., and Europe. But under $100, I think Disney's a buy, and literally at $4.15, I'm going to start making calls and seeing what I can do in Disney. I like that name. NVIDIA, I don't follow, but Disney's a name I really, really like, and I think it's cheap. And I will tell you one quick story about this market. I know Mike talked about how bullish he is. And I was at a wedding in New York a few weeks ago, and it was a former market maker's son marrying an Israeli girl, and her dad is a billionaire, and that's billion with a B, not million with an M. And I was sitting between two billionaires, and this is just coincidence. And it's like, what do you do? What do you do? I'm a billionaire. Oh, I trade options. I'm a billionaire. And both express the same sentiment to me, which is they would be buying the U.S. with both hands. And two reasons. Number one, they think interest rates are in the equation already. And number two, tax law. So I think part of the crack you saw today was this uncertainty about tax law. But I am with Mike on this. I think this market is going to go a lot higher. And to your point about, we've seen every piece of bad news. Threats of war in Korea, a coup d'etat in Saudi Arabia, right? You think about a coup d'etat in Saudi Arabia, there's a time this market would have been down 1,000 points. And this market, you just can't seem to bang it lower.
Yeah, a lot of true points there. I'll see what I can do to buy you some time, Mr. Viceroy. Let you buy yourself some Disney, because it's time for us to keep on rolling into our next segment. It's time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, that funky tune means it's time for the funky part of the show, time for the Odd Block, the portion where we break down the weird, the wild, the whimsical, sometimes just downright head-scratching paper that's lighting up our tape. Mr. Viceroy, I know I said I'd give you a break. I lied. But I don't know how much you've been listening to the show lately. But we've been breaking down these crazy cakes, the only way you could describe them, these crazy puts out here in Tesla. Number one options positioned by a country mile out here in Tesla these days. Jan 2019, 50 puts, over 33,000 of those bad boys open. Only 64 hitting the tape today, so a quiet day here. Usually a couple hundred, at least maybe a few thousand hitting the tape any given day. Today, pretty quiet, and $1.50 of the par put. So those are starting lighting it up out there as well, which is interesting. But now that we have you back on the show, Mr. Viceroy, you can finally admit to us it is indeed you, right? That you're the one buying all these junk puts in Tesla, right?
I have to admit it, but when I talked about all the funky structured product that exists, that's the kind of stuff that goes into structured product. But I have to admit, I'll come clean. It's been me.
I knew it. Every time I saw these going up 300 at a time, I said, that has the whiff of the Viceroy about it. So there we go, listeners. Now we know the culprit It is Alex and Exynos. Send your hate mail his way, or your love if you're a fan of that position out there. There we go. The mystery is solved. All right, moving on to serious stuff. Moving on to what we actually saw today. There's been a lot of news out there in Time Warner of late. Some talk of them recently of them trying now to make spin-off CNN, trying to keep hope alive out there in their merger deal mania. They closing today, $87 and a nickel. Ticker, of course, TWX, selling off about $1.50 today. So a little bit of a downside on the old news, extending the market quite a bit, about 3x what the market was selling off. This is a name that does about 18, nearly 19,000 contracts a day, doing about 136,000 today. So a little bit more than normal, about 3.5 to 1 puts over calls. In fact, of that 136,000, looks like about 60 came in this one pretty sizable put roll. Looks like someone deciding to get themselves a little bit more time on the downside here. We saw the June 90 put spread going up 30,000 times, about 30,000 in one block over there on the 90 puts. Paper coming in, just crushing it, well below the bid there, and gobbling up offers on the June. OI worthy to know about 42,000 on the Jan, and literally zero on the June. So this is clearly opening. Has all the blush here of keeping the puts alive. If that's the case, interesting time to roll these. They do have some time left. But then again, we are shy of that 90 handle, so maybe he's trying to take advantage of what little meat there is on those Jan puts to turn around and use them. Either way, the timing, all of this is kind of interesting. Let's look out here and see how this name has been faring. It's been an interesting time, certainly since the last earnings cycle. It's been an interesting year. It's kind of been a year of giving and taking away out here in Time Warner. It started the year right around this level, 85. Got as high very recently as over the century handle, up to about 103, nearly 104. And then it kind of came right back down with an aggressive slide post-earnings. And we're trading pretty much almost unched on the year now, $87. So up a whopping $2 on the year here for Time Warner. And it sounds like if this paper is to be believed, our friend here perhaps a little concerned that the downside could continue and continue well past January, I should say. Also worth noting, today's news probably maybe Charlie driving, understandably buying a little bit of time out there as well. Mr. Meatball, we'll start with you. What's your take here? You think this is, again, indeed just a size straight-up put roll in here in TWX, or are you sniffing something else?
Yeah, I mean, TWX has been in the news, obviously, because of the whole deal with the AT&T deal. But yeah, I do think that's all it is somebody's moving paper from one spot to another. That is what it appears to be.
Yeah, it's just more interesting for the size and and the timing. Interesting time to be rolling Jan puts. They're actually working for you right now. Maybe let those bad boys run a little bit before you decide to cash and roll. But c'est la vie. We've seen stranger things. Not to reference the show here, but let's move on to this is the name we talked about not too long ago. This was our old friend XSP. In fact, I'm going to try while we're talking here to see if I can bring up exactly what the date of the last show that we mentioned this on. Looks like it was back in October 12th, if my math here is correct. There we go. Yes, it was October 12th where we talked about XSP, and we mentioned at the time, this is, of course, the mini SPX index closing today, 258.46. Talked at the time how we don't really see a lot of paper going up in this name for a lot of reasons. A mini SPX, somebody will say, yeah, that's a genius choice given SPY, but usually if you want to trade SPX, and especially for the tax advantages, you have size behind you, so you don't really need the smaller contract. So it's kind of a bit of a product maybe in search of a market. If your smaller SPY works well regardless. But we did see some paper back on the 12th. Looks like we saw some puts rolling from OC 236 puts, selling those out and coming in to buy the NOV expiring on the 10th. 2 half puts, 250 puts out there, doing that about 42,000 times. Well, surprise, surprise. Looks like the roll-in fever continues. What we saw today was, again, put rolls, narrative of the day out here. Looks like rolling those 2 half puts that we saw go up back about a month ago, expiring, on the 10th, which is tomorrow, and rolling those out This time, I think he decided to give himself a little bit more wiggle room. Rolling it only for a month or so, actually a few weeks last time, didn't really seem to do it for him. So he's going all the way out to Feb, and he's going all the way down one strike to the 249 strike. So we saw the Nove 250 here, a Feb 249. Put spread going up 49,518 times, going a little bit extra size. Looks like opening buy-in on the Feb to the tune of OI, pretty negligible out there, and also closing perhaps on let's just say probably, expired tomorrow, on the 250 puts OI 51,000 on that strike. I don't need to look at the chart for you to tell you what the S&P has been doing. You guys know that already. Mark, this is kind of one we talked about before. A little bit of a weird product. It's kind of maybe in search of an audience, but it clearly seems to resonate with this guy who just loves rolling puts in XSP. What do you feel about our friend here who's keeping the downside party at least alive?
Well, it's probably a hedging operation systematized. Makes sense. Maybe some sort of SMA program where they're kind of just managing, they're doing this to manage a bunch of SMAs. In fact, that's what it kind of smells like. This is a bunch of separately managed accounts that are then, block traded and then redistributed back after they're done. XSP is like since it's small, is the perfect. The perfect use case for an SMA type of trade. It's perfect for that. That's kind of my gut, and is that is what this is.
Mr. Viceroy, I've been hoping to buy you some time here on the show. Did I buy you enough time? Did you dip your hands into DIS here in the after hours?
Yeah, I didn't get nearly enough, and I'm a 90 limit to see if I can get more, but the after hours is a funny market. The great thing about being in institution, having come out of retail, is I have the ability to tap resources that normally you wouldn't see. The bad thing about being institution is I pay a fortune to trade, but I got a little bit of it, not enough to make a difference. But I'm out there at a limit of 90, trying to buy more. I'll let it sit there for a few minutes, and then we'll see how that.
So what you're saying is I should lean on you with a 91 bid.
On Disney?
Yeah, I'm kidding, Alex.
Just rekindling all the love right there, Mr. Meatball. He's been out for a couple of years, and you just you bring him on the show, you just slap him right back in the face again. But there you go, listeners. If you're looking for an exit in Disney, you don't mind hitting a 90 handle, you got a size bid out there waiting for you. So send some shares the Viceroy's way. He'll take what you can get. Meanwhile, moving on to our final name / victim here in the old odd block today. This is ENSCO PLC. Wouldn't be the odd block without a little bit of offshore drilling. That's what we got here. Ticker symbol ESV. Closing today, $6 and change, up about a quarter on the day, or a little over 4%. This name that does about 5,300 contracts a day, doing nearly 41,000 today. And if you pull it up on your screen, look at the tickers, listeners, you'll see the big trade that kind of lit it up. It was the Jan 2018 7 calls. Someone just had, I think what you can only say, #call love out here in ESV. They started off, they did total of about 31,000. They ended up doing it in a bunch of blocks, starting off block of 10 grand here for 32 cents, pretty much lifting the offer, or close to it. And then coming in, getting 10,000 more for 31 cents. And then dropping their size down, smaller and smaller blocks throughout the rest of the day, totaling a little over 31,000 here on the day. Worth noting, no OI to speak of. Well, about 2,400, certainly not enough to cover what we're talking about here. This is the side. This is, it's about 6x the average ADV in this name. So this is pretty sizable for most names, let alone a name that doesn't do a heck of a lot of paper on a given day. If you're not familiar with this name, it's kind of been following a similar trajectory to a lot of the drillers out there. I mean, it's kind of been turbulent waters, hitting a high of about $12 back in the beginning of the year, a couple days after Inauguration Day, about $12, right around the 25th of January. Then it's kind of pretty much straight downhill from there, bottoming out in August right around $4.10 or so. Since then, up about 50% from that level, so trading $6.17. And it seems like perhaps, if this paper is to be believed, that it looks like someone perhaps thinking the party is still going. Mr. Meatball, take us home, sir. What are you thinking about this size call love in ESV?
I mean, clearly somebody thinks this stock is going higher. This looks it is 100% opening, and they're already up a little bit, but it looks like a nice little trade. Somebody now, was there stock involved? I didn't see, but it looks like definitely some. I mean, this paper is definitely bullish. I mean, this is a huge trade relative to the open interest in. There's not a single strike in all of ESV that has that kind of open interest. The next strike with the most open interest is the Jan 5s that have 22,000. So this is a big call buy. It might actually eclipse the amount of call open interest in all of January. So a pretty nice purchase.
Yeah, it's like I haven't had a chance to parse the stock here quickly, but looking just on the numbers, it averages about 17 million shares a day, doing about 18.8 today. So a little bump that would certainly cover the deltas for some of this if they did indeed do it tied. So we'll have to dig into that and let us know. Speaking of digging, it's time for Uncle Mike to dig into some strategery as it's time for the strategy block.
It's time to dispense options, wit, wisdom, and education. It's time for the Strategy Block.
All right, Uncle Mike, we got a lot to choose from these days. We got earnings on the micro side. Of course, we got the Viceroy here, so perhaps you want to go macro. What's floating your boat today, sir?
Well, I want to keep it simple for today, and I want to keep it simple because today is a day that, just from talking with a couple clients and where a lot of people are, this is, I guess, in my little mini world, there was a lot of fear that came out in terms of the market in general in the middle of the day. So, for example, I had the same email from the same guy right after Trump was elected on election night a year ago, and the S&P went down 100 points. I got an email from this guy. He's like, well, hopefully we're short everything right now. This is the very, very, very scared about what was going on. Same guy, same email today, almost at the very low of the market, with concerns as well. So with that, if that's he's one of my bullish indicators.
I was going to say, he's a good contrarian indicator there. Totally. And so the pulse of the market right now is that I would say, at least in the retail world and the world with which I live, everyone is watching the market go higher, but there is a ton of fear right now. And just everyone's afraid that, well, the market's at all-time highs. And since the market's at all-time highs, I don't know if I want to get in right now, but that's what everyone's been saying since, years now, quite honestly. This is a very fearful, hated rally. So let's say you're of the camp that you're tired of watching this market go up while you're still in cash. Well, I'm going to go back to the basics today and just give you a thought of mine of something that you can do to where this is you can get into the market, and you can do it at a level in a way with which it won't scare you half to death and keep you up at night. So let's say, for example, that you really like the S&P 500 right now, and I'm just using SPY as an example. I'm actually not in the position, nor will I be, that I'm about to mention, just because my strikes and months don't line up with what I'm about to describe, but I'm just picking a sheer random example. For February, 99 days till expiration, you could buy the 260 call option on SPY, $4.44 if you get filled at the ask price. You could simultaneously sell the 265 call, $1.98 if you get filled at the bid on this one by selling it. So let's say in doing so that you can actually get filled in doing this trade at $2.45.
Now, let's say that you have $25,000 or $26,000 sitting around that normally you would consider perhaps buying 100 shares of SPY. Well, you're just scared to death. You can't do it. You're not able to pull the trigger on it. Maybe look into buying this call spread. Buy even a 2-lot of this call spread. And by buying a 2-lot of this call spread, you can have all that money sitting in cash that you're so scared of and you're going to lose. And you can actually have participation in the market from roughly 262.5 till 265. And by doing it that way, you buy a spread, you buy 2 of them, you're going to make roughly $500. And so with that being said, it's one way with which if you're from Fear University, let's say, and you just don't want to get into this market, but it's going up and you're just staying up at night. Well, should I get in now? I don't want to get in now. It's about to go down. What do I do? What do I do? What do I do? This is something with which to consider in that volatility is relatively low right now. And so you might even want to just buy a call. But if you want to buy a spread, this is something to consider because you can have participation in the market and you can use the option product for limited risk. If you're wrong and you know what, I knew it as soon as I get in, the market's just going to tank. Well, if that's the case, you're out $500. You got another $25,500 in your account that was untouched. But if the market does go higher, well, you'll have a little bit of it. You'll be able to participate on it for a little bit anyway. Now, obviously, this could be done with a variety of strikes and for a variety of time frames. But what I would encourage you to do today is that if you want to get into this market and you're just concerned that you're buying the all-time high, do a spread. It's something to consider. And that is the strategy block for today.
Thank you for that, Uncle Mike. And let's see if we can squeeze in a few listeners here today, as well as some fun questions we like to ask you guys, because it's time for a little mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody, welcome to the Mail Block. Like the name implies, this is indeed the portion of the show. Your old friend Henry, Mr. Viceroy, already chiming in. He knew you were on. He's excited. He says you're already up $1 on your Disney scoop there. So there you go. You still bid for more there, Mr. Viceroy?
No, we're out.
Oh, you're out. You're out of that Disney bid. Let's see how we're looking here now. Updating us on all things Diz. See the Flowmaster, he's on these things. Yeah, looking not too bad. If you got some at 90, that's a good print, shall we say? Moving on to you guys like to sling a lot of action around earnings, as the numbers imply. Even though we've advocated many times, maybe you want to wait out the event itself before or after. That's fine. Then riding over the falls there, bit of a coin flip. That said, we know you guys love to do it. So we thought we'd ask you guys, hey, what is your go-to? What's your MO? How do you sling your options when it's earnings season? Gave you some very straightforward choices you could write in with your own. We said, do you like to just buy calls or call spreads, a little vertical action, as Uncle Mike was just breaking down, or to the dark side, buying puts or put spreads for the downside there, or even more dark side, selling those puts or put spreads. Or you we kind of bunched all the wings in together. So flies, or iron condors. I don't care, long, short. We didn't discriminate. Have at it. Put all those together for choice number 4. Mr. Viceroy, as our guest, we shall start with you. If you have a way, if you were forced right now, gun to your head, to trade an earnings event, how would you do it? And also, B, what do you think our audience is picking here?
Don't know what the audience is picking, but I know you sent it to me, so I didn't. I'm guilty of not reading it. In the role I have now, I like to hide on most earnings days, with the exception of where there's some real vol spikes. And then we essentially do vertical calendars. We do what's a market maker trade more than a retail trade, but we'll basically sell a vertical in the high vol period and buy a vertical in the post-vol period. The debate about how to trade earnings with options will go on forever. And most of the world talks about, I like to sell straddles, and boom, you get one Amazon where you move $140 at earnings. And all of us who have been on the show say, this is why you don't do it. This is why you don't do it. It's going to happen rarely, but when it does, it's going to kill you. And 2 weeks back, we had an extinction event. So some type of spread, something to capture the front vol. If it's a listener and all they want to do are, they're bullish and they want to do a vertical, wash the vol out of it, I'm fine with that trade.
There you go, Mr. Viceroy. Not coming down on what the listener said, but kind of echoing our sentiment there in terms of avoiding the event, if at all possible. Mr. Greasy Meatball, let's turn back to you, sir. I know you've waited on this before. Have you changed your mind? How do you think our audience is faring and voting so far?
Yeah, I'm sure that they're, I think the last time they were primo hogs. But I'll tell you, yeah, I'm with Alex. I just don't think there's an actual, you get a lot of people talking about some sort of statistical edge in selling earnings vol. I just don't see it there. Because, you win 80% of the time, but the 20% of the time you lose what you made on the 80%. So you end up just kind of in a wash. But yeah, I'm going to say that the listeners have gravitated toward going long calls or going long premium. They're all primo hogs now.
Well, we have had surprising voting of late for long premium strategies. I thought a bigger percentage of our audience leaned dark side, but these days you guys are all over the buy. And that said, well, I won't follow that up because I don't want to give a spoiler to Uncle Mike. But the results this time are interesting. Mr. Uncle Mike, last time we talked about this, you had a write-in for vertical back spreads. Is that still your write-in, or do you want to change it? And what do you think our audience is up to?
No, I'm going to keep my write-in on the vertical back spreads if I had to have something. But full disclosure, I'm kind of like Alex on earnings days. I prefer to hide. But in reality, I like doing a vertical back spread if I have to do it. And if the premium is in such a way that as it was in Apple back in my Apple earnings day dodging days. And I'm guessing the audience will be of the call spread variety.
And yeah, Mark, after this, I'd love to get Alex's opinion on after hours options trading. See what he thinks on that as well, because I think he'll have some good opinions for that. So maybe ask him that next.
Because we don't know how he fares on that one. I think Alex is on my tip there, but maybe his opinions have changed. We shall see. Meanwhile, let's move on. What you guys are actually voting for? If you haven't voted yet, you got about a day or two left. It's a question of the week, so it goes to, I think sometimes we extended into the weekend a little bit too. So you got a few days left if you haven't voted. And it's a pretty fair fight right now, I have to say. 34% going to that. I thought that was a super stack, but it hasn't won demonstrably yet. The fly/iron condor category, 34% for that. Hot on its heels. 33% coming dark side, saying selling puts or put spreads. 28% buying calls or verticals. Only 5% want to buy puts, so no love for downside at all in terms of straight out prolonged premium strategies here for earnings. That said, Mr. Viceroy, Mark just alluded to it, but we've had this conversation in the past when you used to be on the show years ago. It kind of just got brought up again recently. It is earnings time, so everyone's kind of got after hours on the brand. We were just talking after hours in Disney a few minutes ago. So the corollary to that always this time of year is, hey, why don't we have that in options? I know you used to be kind of a stalwart supporter of that. Is that still your take, sir?
Yeah, absolutely. And the exchange here, SIBO, as an example, has demonstrated that it can trade virtually 24 hours a day. The excuse was always, it's too expensive, we won't do it. And then you have a monopoly product with a high royalty fee, and you say, I want to squeeze everything out of it I can. The U.S. exchange community, now that I'm no longer there and I'm no longer at a member firm, is the most fragmented market I have ever seen. But having said that, bless them for the liquidity they provide. Because if you go and trade in Europe or you go and trade options in Asia, you know, the old joke about you trade by appointment. I mean, I trade stocks where there are hundreds of millions of shares outstanding, and I am the volume in the options on some of the foreign exchanges. The exchanges should go 24 hours. If it's expensive, do it on a handful of names. What are the handful of names? Everybody knows what the handful of names is. You know, it's Apple, Amazon, Netflix, Facebook. Today it was Disney and NVIDIA. Why couldn't you leave those two up? Most of your market making is remote. Most of your market making isn't on a physical floor anymore. Yeah, they're in 440 or they're in the Board of Trade or they're in 7 World Trade. But would they stay late for that kind of paper? You bet they'd stay late for that kind of paper. It's politics. It's politics. I could have recorded this rant when I was at OX Schwab. It's politics. The exchanges need to get off their fannies and open for some of these events.
Well, you know, Alex, the one issue you have is that now that there's like 15 exchanges, market making is extremely expensive, and there are firms just leaving. Goldman left the market making business entirely. Yep. Who's gonna provide the liquidity after hours? You'll get super wide markets like you do in SPX and VIX, but maybe that's all we need is just if somebody really wants to do something to have that liquidity available. But it's going to be, you know, we've talked about it, the liquidity will be nothing like normal U.S. hours. So that's my one comment, or that's probably the rebuttal you'd get.
Yeah, well, here, I agree with you. I spent a year at the Chicago Stock Exchange working on their, when I left OX Schwab, I had a couple consulting gigs. And what I've learned, consulting is a nice way of saying you're unemployed. But I spent a year at the Chicago Stock Exchange, which is the most wonderful people, the smallest market share. There are 1/2 of one share. 1/2 of one share. If you're MyX, if you're EdgeX, I could go down the list. I think there are 5 options exchanges that are each less than a 5 share. You tell me how expensive it is for those people to stay open. You say, yeah, markets are going to be wide. And I'm going to quote what you said, Mark, like SPX and VIX, like monopoly markets. But here's the thing, in a Disney or an NVIDIA or the day Amazon is up $130 and you can't buy the stock without paying 10 up for that in Hong Kong or London or Frankfurt. You say markets are going to be wide. There are lots of little independent traders. I mean, who makes after-hours markets and stocks? Goldman's not there after hours. Citadel's not there after hours. SIG's not there after hours. This is going to sound negative. There are these little guys in small shops that already have market-making ability, or they're pooling market-making ability. I could do a whole show on pooling market-making. I didn't even know that existed, where you share co-location costs. But would those guys be trading options on Disney right now? Would they be trading options on NVIDIA right now? Yeah, and the $4 option.
You're right. They would. They totally would. That would be the one thing that like the independent market maker could actually trade and maybe make a living on. Actually, now that I think about it.
Yeah, and here's the thing: Goldman and Citadel would come back. Goldman and Citadel would come back, and then it would be fine. I mean, it's a classic economic model. No money's being made. People leave. It becomes more attractive. Spreads widen. So how ugly would an NVIDIA option be at this time if it were trading 420 bid, 470 offered? You say, that's egregious. The bid offer is more than 10% of the underlying value, but that's the market. And liquidity has a price. And I'd rather see a 420, 470 NVIDIA market than having to wait tomorrow, coming in and be blind at the opening.
And I love it. I love having the Viceroy back on the show here. It balances out you two naysayers on after hours. Now we got 2 versus 2. So there we go. The scale's a little evenly. I always fall down. A little bit of liquidity may be better. Is usually better, actually, than none at all, which is what we got right now. But we'll have to leave it right there. We got going a little long because we're having fun here today. We got to keep on rolling into our final segment. It's time for Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block. This is, of course, a portion of the show where we break down what we're keeping an eye on for the rest of this week into the weekend. Quick check back in on our friends that we're reporting today. Mr. Viceroy, I'm with you on that 90 bid for DIS. Still hovering around almost unched now in the after, just slightly up now. So if you got any at 90, hold on to that for grim life. That's a good fill. But that said, it seems like it's quieting down in the after hours. They're up slightly now. Was slightly down, now reversing a little bit up. So maybe perhaps as they digest it, these numbers not looking as bad. And NVIDIA still on the upside, but nowhere near what they were pricing in. They were pricing in about $16, and so far in the after hours, just shy of $2 here on the upside. So either way, both of them are not exactly outperformer, but looks like at least in Disney, you may have had a chance to scalp if you were a wee bit savvy. We shall see. The ink is not yet dry on all things Disney. That said, let's go back around the horn, see what each of us are watching for the rest of this week. Let's start with you, Uncle Mike. What are you keeping an eye on for the rest of this week, sir?
2,600 in the S&P. Going to see if we can touch it tomorrow or get over it for that matter. Keeping an eye on that. Keeping an eye on the debate in Congress over whether there's going to be 4 tax brackets or 5 tax brackets to see if compromise can be met and the Republican Party can come together to present the tax plan that they want. What the heck? We'll also watch President Trump's Twitter account. That's always something good to watch.
That's always something good. Same question for you, Mr. Viceroy. What is catching your eye? I'm going to guess it's something macro, but we'll see.
Taxes, and more taxes. When you're in a position in the institutional community, and I hate to keep harping on that, taxes are a huge part of our decision-making and our expectation about taxes, and even the conversation of things that rates will change, the estate tax may go away. You can't imagine what an impact that would have. The estate tax goes away, it's going to be the world's biggest unlock of what is now, quotes, restricted stock. It's going to be real interesting to see what that does.
There you go. You can always count on the Viceroy for a little macro and perhaps a little tax thrown in there as well. And last but not least, Mr. Meatball, what are you watching, sir, for the rest of this week?
I'm watching the bond market. J&K, the high yield bond market, HYG and J&K those charts look ugly. HYG has just been on a free fall, J&K on a free fall. I'm watching the Russell 2000. If the Russell 2000 stays weak, we are not going to touch 2,600, folks. That index has been the leader for kind of what's happened on the day. We've seen a couple of days in the last few weeks where the Russell starts to go red and everything just kind of tanks with it. Today, yesterday, or the last couple of days, that it's been the big indicator. And that's all kind of tied to treasuries, which I think are a little overbought here, and I think are heading lower as well. There's and how about the VIX 10.5? So I'm going to see if it goes back below 10 and they just destroy VIX futures expiring next Wednesday, or whether maybe we've got a secondary visit to 12. How fun would that be? That's what I'm watching.
That would be quite fun. Back up in those stratospheric levels of 12. I wouldn't know what to do with myself out there. All right, that's going to bring to a close this fun episode. Oh, so fun to have the Viceroy back on. But before we go, let's go back around the horn really quickly, see what each of us is working on that may interest you. Let's start with the aforementioned Viceroy. Let's see, listeners, if we can collectively get him back on Twitter. He hasn't tweeted since June of this year, so give him a follow. He's only got 39 followers. Follow the man, A. Jacobson M5 over there on Twitter, Jacobson. And then you too, maybe we can get him to at least tweet once a quarter or so. What do you say, Mr. Viceroy? Is that a reasonable schedule?
Certainly. Why not? You've just ruined my life.
There you go. I know you like your Facebook, so you know you're not averse at all to social media. And outside of that, if people are interested in what you're doing, Mr. Viceroy, maybe they want to talk to you about what you're up to over at Exynos. Where should they go? What should they do?
Email address is my name, A. Jacobson at Exynos US, EXITOSUS.com. Pretty much see email all the time when markets get busy or I'm doing something as fun as the show. I don't see email, but on the desk generally from 11 p.m. to 11 a.m. And if things get busy, I'm on the desk from 11 p.m. to 10 p.m. when my wife calls and says she's leaving. But sure, more than happy to chat by email.
There you go. I just pushed you over 40 there, Mr. Jacobson. So now you got to tweet at least once a quarter. You got those 40 people hanging on every word. But this was fun. We'll definitely have to have you back on again shortly. And Mr. Uncle Mike, what's cooking with you, sir? Let's say I was, for instance, maybe disinterested in ticket charges, or I was interested in SKU. What can I do?
You can give me a call if your financial advisor was not eagerly watching markets with bated breath at 11:30 Chicago time, trying to figure out ways with which he could sell puts or at least do stuff to make sure that your long portfolio was hedged properly. Then I agree with Mr. the Greasy Meatball. He should be fired immediately, if not sooner. Contact me. I can help. 312-212-3531 or shoot me an email at mtosaw@rcmfs.com.
And speaking of the aforementioned Greasy Meatball, even though we try not to, that said, Mr. Meatball, I think you guys are kicking around some new fund over there. What's going on over there in Carmen Line?
Yeah, we're in the middle of our pre-launch for our second hedge fund. It's going to launch in Q1 of 2018. Things have been a really interesting trading today. I had a lot of fun. I was busy doing stuff, and I was enjoying it, which means it was a good day. And then at Option Pit, we've got an Easy VIX course that we're going to start doing our free intro webinar next week. So be on the lookout if you want to learn how VIX works and why I like it so much, and why Alex and Mark and Mike Tosaw love it so much, why it's having a four-way relationship with the Options Insider Radio. Then you're going to want to check out that Easy VIX webinar that we're going to have next week.
We love our VIX relationships. All right. And on behalf of the Viceroy and the Greasy Meatball and Uncle Mike, and indeed myself, thank all of you out there in the listening audience for downloading, streaming, subscribing. For all of you live, make sure you tune in tomorrow. We got 2 shows on the docket for you. Actually do every Friday. Got our vol views at noon, and then just judging by your feedback, you guys want to talk a lot of Bitcoin on TWIFO, so I'm guessing we're probably going to do just that at 1:30. So tune in noon Central for vol views, 1:30 p.m. Central for TWIFO. We'll try to keep something going on in the interim there so you can stay tuned in, maybe get a little live news, some other fun stuff from the network. So stay tuned for that. Otherwise, we'll see you on Monday for more of the Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.